What a crazy week we've had on Wall Street. On Thursday, TSMC, the single most important company in the AI trade, grew revenue 36%, printed record margins, and raised its outlook for the year. Despite all of this, semis crashed 9% on the week. QQQ lost 700 for the first time, and SPY finally dropped the 747 shelf. Every single line that we've been tracking for the past 4 episodes broke in 48 hours, and today we're going to look at the major levels to look at in the week ahead. I think the real question that we need to ask is, how do these blowout numbers get delivered and the semiconductor trade remains to get sold off this week? TSM reported record revenue at $40.2 billion, a 36% year-over-year growth and 12% quarter-over-quarter number. Margins also grow 67.7%, and operating margins are only at 60%. Both above guidance, and EPS was up 77% year over year. These are record numbers for a chip foundry, and this further confirms that the AI trade is far from a fallacy. Despite all those record numbers being reported, it's surprising to say that TSMC fell on the print and dropped roughly another 3% on Friday. Thursday, the SMH as a whole dropped 3.7% and Micron dropped 6%. The entire AI infrastructure and build-out stocks all suffered some severe losses this week. Now let's take a look at how the overall market closed for the week. The Dow posed a loss of 0.77%. The Nasdaq lost 1.4% as tech continues to sell off, and the S&P 500 joined the party and lost 1.01%, and small cap Russell 2000 also lost 0.52%. So overall, there were major losses across the board, and when we take a look at the heat map here, you can see that there was really no place for investors to hide outside of the energy sector, which did happen to claw out a few winners, and there were a couple of healthcare names where you could have tried to find some shelter, but overall everything else in the market seemed to bleed off and investors were running for the doors. Taking a look at what sectors led the day, it's no surprise that energy is at the top of this list, and the major laggards on the day were technology, consumer cyclicals, and communication services. Overall on the week, to end the week, energy is the winner, real estate names, and the major laggards are technology, industrials, and communication services as well. Before taking a look at the NASDAQ major levels that we should look out for in the upcoming week, let's take a look at the bear chart with just the EMAs present. The first thing you initially notice is, for the first time since April 7th, price was able to close confidently under the 50 EMA, which currently sits at 706.31. So this is something that bulls should start to get nervous about, as we can see from multiple occasions on June 9th, on July 8th, and actually multiple touch points here. We can see that the 50 EMA has continued to act as support, so Friday's close really is worrisome for bulls, and we need to look for the 50 EMA to get reclaimed going into next week. Now let's take a look at the QQQ's major levels to go into next week to keep an eye out for. You can see today that we bounced off of the June low at 686.37 almost to the cent, and bulls were able to push price back. We hit highs of 703 on the day, but ultimately it was sold off and the day ended at 695.33. The most important level right above us would be the psychological level of 700, a nice round number. But ultimately, I do want to see bulls be able to push price back above the 50 EMA at 706. An even better close would be getting back above the 713 level. But something that bulls do need to keep in mind is that any close under 713 would lead to yet another lower high being created, because as you can see here, the highs that the market is able to push this to continue to get lower and lower, and even if we got to 713, and ultimately crossed back down towards the 700 mark, this would be yet another lower high, and you can see that the trend is starting to stair step its way down, causing concern for bulls and this AI build out. If this is truly the real deal and we can continue higher and retest all-time highs with 748. So ultimately you want to see bulls be able to push price back at or above 725, and that would lead to an equal high across the board. Then we can start to reconstruct price and move back towards the all-time high. Taking a look at the QQQ on the weekly time frame, the most concerning metric that I see is, for the first time since the April low, you're starting to see the MACD get into a position to cross negatively. This will also come at a time where we are testing the 20-week moving average, and you can see also we haven't touched this since the April lows as well. So multiple divergences are happening, and the bears are really starting to take control of this price action. Another thing to notice is during this entire rally, the 8 weekly EMA has served as support. As you can see, multiple touch points have led to price respecting that level and ultimately moving higher, but we have broken that this week and have even moved all the way down to the 20-week EMA. So this is a cause of concern that we must look at into the week moving forward. Now let's take a look at the S&P. Now let's take a look at the SPY, the proxy for the S&P 500. The first thing you initially notice is that price has rejected off of the 8 EMA along with the 20 EMA. This is the first time we are getting a close under the 20 EMA since the end of June. So that is a bit worrisome, but unlike the QQQ, we can see that the 50 EMA is still acting as a line of support, and as it has for this entire run up, where we can count on bulls to show up around the 50 EMA for the SPY. Really, the S&P is looking in a lot better shape than tech. That's due to the defensive names that the SPY holds that the QQQ doesn't, since the NASDAQ is mainly tech centered. We would have loved to see bulls be able to defend the 750 psychological level, as we were within striking distance of 760, which is the all-time high. But unfortunately, bulls were not able to hold that level, and we closed the day at 743, almost a loss of a full percentage on the SPY. Now taking a look at the major levels on the SPY, as I mentioned previously, 750 is a major line in the sand that we would have wanted to see bulls to hold, but unfortunately bears were able to push us lower. We're hovering right above the 50 EMA, which stands at 738, and if that level is lost, 730.95 will pose as the next level that we can look for support and a bounce. You did have higher volume to end the week, so this could lead to a bottoming tail here, and price could push up into next week. I mean, when you really think about what occurred this week, we got really good inflation numbers with CPI and PPI. So inflation and jobs numbers have been going down. Jobless claims numbers have been going down. So these are great metrics for the Fed to merit no rate hikes in the near future. Something to take note on is, though, that the MACD has crossed negatively on the daily chart for the SPY, so momentum is favoring the downside. In order for this bull trend to continue, bulls need to push price back above the 20 EMA, which currently sits at 746, and the 8 EMA that sits at 749. So for back of napkin math, you can just look for SPY to be pushed above 750, and we would once again be back above all of the moving averages, and the bull trend is clearly still intact. At that point, you'd only be about 1% from all-time highs, and it would be very likely that we print a new one. Taking a look at the SMH, the semiconductor ETF, we are in a lot worse shape than the QQQ and SPY. Semiconductor names and memory names have taken a punishing hit over this past week, and you can see as of Friday's close, we closed the day at 556.53, another 2% down on the day, and the second consecutive close under the 50 EMA. This is worrisome. I mean, throughout this whole run, price has respected the 8 EMA and really has held and been planted towards the 8 EMA. You lost it for a couple days here, but then you ultimately popped right back above it just to hover around it once again. But over the last week, price has confidently closed under the 8 EMA and has even lost the 50 EMA for the last 2 days. And you can see the 50 posed as support here on July 8th and July 7th. And prior to that, we weren't under the 50 EMA since the end of March. So things are really starting to break down for semiconductors. This is really the line in the sand that bulls need to defend. Price could go maybe to 526, which is the low of 519. Overall, it's not looking too good. A lot of these EMAs are starting to point down. Let's see where we are. RSI currently at 40, so there is a bit of ways to go down till we get to oversold levels. It would be important to see a turnaround and get a reclaim of the 581 level, and that would put us right back around the 8 and 20 EMA. But that would also paint another lower high to be made, so the trend still remains bearish until we get a close back above the 600 psychological level, and even better would be 612 to make an equal high in regards to this shelf that you see here. So bulls really have to show us something going into the next week, and let's see how we end up.